Today, we're taking a deep dive into Pembina Pipeline's latest earnings report. Now, on the surface, it looks like they had a blockbuster year. But if you dig just a little bit deeper, there's a really interesting twist that tells a much bigger story about where this company is headed.
So let's just jump right in. Pembina posts a record-breaking year, but then their final quarter was, well, surprisingly weak. So what gives? Is this a red flag? A sign of trouble? Or is there a much bigger strategic game being played behind the numbers? That's the big question we're going to unpack right now.
First up, let's talk about the good stuff. Because you gotta hand it to them. For the full year of 2025, Pembina had an absolutely fantastic, banner year.
I mean, look at this number. Their full-year adjusted EBITDA hit a record-shattering 4.289 billion Canadian dollars. This is the big, flashy headline, a huge win for the company, and it really shows the strength of their core business. And it wasn't just that one number, not by a long shot. The whole year was just incredibly solid. Full-year earnings were nearly $1.7 billion, and they pulled in over $2.8 billion in adjusted cash flow. They also moved record amounts of product through their systems, a full 3% more than the year before. And to top it all off, their earnings per share, that easily beat what the analysts were expecting. So by all accounts, a phenomenal year. But this is where our story takes a sharp turn. In spite of that absolutely amazing year, the last 3 months, Q4, told a completely different story. And the contrast here is pretty stark. After a record high year, their Q4 adjusted EBITDA actually dropped 14% compared to the same time last year. And revenue, it missed expectations by almost $400 million. So what on earth happened? Now, this wasn't just some random dip. The company pointed to 3 very specific things. They got a little less from their marketing and new ventures division, a new toll structure on a major pipeline had an impact, and there was a one-time financial boost in 2024 that just didn't happen again this year. So these are explainable reasons, not a sign that the whole business is falling apart. Okay, we've been throwing this term adjusted EBITDA around a lot, so let's just do a real quick breakdown. All you need to know is it's a way to measure a company's core operational health. It strips out all the accounting stuff like interest and taxes to give you a clearer picture of how the actual day-to-day business is performing. It's a key number for profitability. All right, so we've got a weak quarter, but we know why. And this is where the story gets really interesting. It shifts from looking back at last quarter's numbers to looking forward at a massive strategic pivot. You see, Pembina isn't just managing what they have, they are aggressively building for what comes next. And this quote from their CEO, Scott Burrows, just perfectly captures their vision. He says they're uniquely positioned to connect our customers to high-value global markets while unlocking new opportunities. The key words you got to hear are global markets and new opportunities. This is all about transformation, not just business as usual. So how are they going to do it? Well, it's not just one big bet. It's a really clear 3-part strategy. Number 1, they're beefing up and modernizing their core pipelines. Number 2, they are going big on liquefied natural gas, or LNG, to tap into those global markets. And number 3, they're jumping into new energy ventures like generating electricity. So what does expanding pipelines actually look like? Well, we're talking about 3 major expansion projects up in Northeast BC and Alberta. And the price tag for the whole thing? About 625 million Canadian dollars. It's all about making sure they can handle the growing energy volumes coming out of Western Canada. And then there's this, their massive bet on LNG. The Cedar LNG project is a huge deal. The floating vessel for it is already more than a third of the way done, and, this is crucial, they've already locked in long-term deals with global giants like Petronas and Ovintiv. This project is basically their ticket to selling into those premium-priced markets over in Asia. The third piece of this puzzle is a move into a brand new business for them, electricity. The Greenlight project is their plan for a new power generation center. They've already got the turbines lined up and even sold some land to a company that could become a major customer. This is all about diversifying their business for the long haul. So, okay, Pembina is spending some serious cash to build out this future. What does all of this mean for their bottom line right now? Let's take a look at their financial outlook for 2026 and what comes after. Well, their forecast for the upcoming year is still really strong. They're predicting an adjusted EBITDA of somewhere between, let's say, $4.1 and $4.4 billion. This tells you that even while they're investing like crazy in these huge new projects, they expect their main business to stay incredibly profitable and stable.
Now, here's what's really interesting. The company is actually calling 2026 a peak year for spending. And this home renovation analogy, it's perfect, right? You spend the most money when you're in the thick of the project, knocking down walls and putting in new floors. But you're doing it to create something much more valuable in the end. That is exactly how Pembina sees 2026.
And of course, that means their debt levels are going to rise for a little while to pay for all this construction. They're projecting their debt-to-EBITDA ratio will peak somewhere between 3.7 and 4.0 times in 2026. This is the high water mark. They're basically telling investors, look, this is as high as it's going to get before things start to turn around. And here's their exact plan to bring that debt right back down. 2026 is the peak spending year. Then, in 2027, that spending drops off a cliff. And by 2028, that massive Cedar LNG project is expected to be up and running, generating a powerful, brand new stream of cash. It's a really clear, multi-year game plan.
So we circle all the way back to the beginning. That weak quarter, it wasn't really a sign of weakness, was it? It was a consequence of a major transformation. Pembina is spending billions to pivot from its old business towards a new future in global LNG and energy. So the real question this leaves us with is this. With these massive investments, has Pembina successfully set the stage to turn one transitional year into a full decade of growth? That's the billion-dollar question everyone's going to be watching.